We were talking about venture capital funds and investing.
We were talking about venture capital. And what did you say?
The way that I put it is that you had asked me about investing in certain funds.
Yeah.
And I said I would be careful because I believe that venture is in they're not necessarily on sound
Footing.
right now.
Yeah. This is like the most doctored Kevin I've ever seen.
I know. Well, I work in venture capital, so that's probably part of the reason why.
Yeah.
So I have to be careful on what I say here. But
So is it fair to say that the gist of what you were saying is venture capital is going to get a lot harder? Is that a fair way?
I believe it's going to be a lot harder for early stage funds. Well, let's first start with the problem and what's changed. So essentially, what we've seen historically with venture capital is that venture capital can be a fantastic return for investors if done right, because you get into early stage, predominantly technology startups, if you're doing venture on the tech side. And if you get into the next Uber or OpenAI or whatever you may, pick your unicorn, the returns are just insane. And they outpace that of pretty much all public, S&P or whatever it may be. It's just a good asset class to be invested in. Not to have all of your eggs in that basket, but a lot of professional investors would want some exposure to venture. Endowments want exposure, universities. That's where a lot of the LPs, the limited partners that invest in these funds come from.
It's also how the GPs make a lot of their management fees. Yum, yum, yum.
That's right. So, yum, yum. So partners at firms both get management fees and they also get upside in the return on those funds.
And also for people who have not enough context, and I would have said this in the intro somewhere, but like you have a ridiculous track record with not just creating companies, but investing in super early stage companies. And I've said this to a lot of people, like you're a rare breed because you are very good at investing in a whole lot of different asset classes at different stages of size and growth. And it's very hard to do that. So I just want to understand that Kevin is speaking from a place of being a very good practitioner of this craft. Continue.
I appreciate you saying that. No, thank you. It's kind of you to say. I've certainly enjoyed the journey. It's a crazy journey when you get to see these things at a very early stage and watch them grow and have eventual outcomes. But the craziness that's happening right now, it should come as no surprise for people listening, is that AI is the absolute darling of Silicon Valley right now. So everyone is talking about AI. All the funds are geared towards AI. I'm a partner over at True Ventures. I would say 9 out of 10 deals that we do these days are all AI focused in some regard. There was a couple decades of what Mark Andreessen famously kind of coined as software eating the world. And now we've kind of transitioned into this world of AI eating the software. So AI is doing a lot of both retooling of the software to make it more, I would say, AI dominant in that you need less employees, and AI does a lot more of the heavy shouldering of the burden and work. And so it's causing a lot of disruption all across multiple industries and multiple verticals, starting with customer service, eventually getting into coding and beyond. Drug discovery, basically everything.
And eventually is like next 12 months. I would imagine law firms are already reading the writing on the wall for hiring of associates for rote tasks that can be done in 30 seconds by AI. I know actually a senior partner at a law firm, he is in charge of spearheading a huge AI initiative within the firm for cost cutting and efficiency.
Absolutely. I have seen it on the legal side as well. Our mutual friend Josh Cook has talked to his junior associates and said, look to your left, look to your right. One of you is not going to be here in the next 5 years. And it's most likely you're just going to be the AI.
5 years is generous.
Yeah, 5 years is very generous. The tea leaves that I'm reading right now, and where I think that venture is going to have a hard time, is that I would say on non-capital intensive businesses, meaning that if you're building something that is hardware based, you're building the next robotics company or whatever it may be, you need a lot of capital to kind of get that off the ground.
Yeah.
There's no doubt that that's still the case. And so venture makes a lot of sense. And I feel very fortunate that we were quite good at that particular area in that, we've done the Pelotons and the Rings and the Fitbits and all those companies that kind of go off and build on the hardware side. On the software side, what's happened in the last, I call it 18 months, is that the barrier to entry for a new engineer, you don't even have to be an engineer. They call it vibe coding now. And so if you have an idea, you can spend the next 48 hours, maybe let's just say double that, watch YouTube videos and be, I would call it a second year computer science student in terms of your kind of efficiency and your ability to deploy.
Like what you can produce.
Yes.
Yeah.
Tim, even today, like if we started today and we said, okay, listen, we're going to make you watch these 10 videos on Cursor and AI and use Claude Code and, insert the 4 or 5 most popular AI coding tools right now.
Mm-hmm.
I would bet without a doubt, within 4 days, you could dream up any app that you could imagine in terms of, the Tim ketone dosing regimen app, whatever it may be.
Ketone-suppositories.ai.
Yeah, exactly. The Bugatti suppository, ketone suppositories.
Gets sued immediately. That'd be awesome.
There's a co-branding deal there somewhere you're missing out on. But I'm not even kidding. You could actually ship that to the App Store and have a fully functioning. And how much is it going to cost you? It's going to cost you, traditionally, you would have gone out, you would have hired a designer, you would have gone out, you would have found an engineer, you probably would have maybe needed a back-end engineer, probably mostly front-end.
Yep.
You'd pick your language. It would have been a whole, call it $250K project.
Side end, power top. All those.
Right. You know the angles that you need to hit. You're already speaking code. Look at you. But imagine that's $250K traditionally, right?
Yeah.
That's $50 now.
It's so nuts.
Because your Cursor account is going to be $50 a month, and you can go and you can deploy that on Vercel for an extra $20 a month.
I don't even know what Vercel is. But I want your help doing this because this is something I want to do. And just to interrupt for a second, and then I want you to tell me what those names correspond to because I haven't been tracking this very closely. I've been meaning to dig into vibe coding.
Yeah.
And then in a team thread with my employees, just like in a few hours at night for a couple of weeks, one of my part-time employees created like an app, a website, everything he wanted, had to pay a little bit for a Getty image to like use Canva Pro to make some graphics, but all in, I think $240 is what he said.
Exactly.
And he was using Base 44, which 6-month-old solo-owned vibe coder Base 44 sells to Wix for $80 million in cash. That was June of this year. And then Lovable, this was in the same thread, which is why it's right here, top of mind for me. Vibe coding platform Lovable becomes fastest growing software startup ever. Swedish AI startup, gotta love the Swedes, right? I mean, they've got some good stuff.
Yeah.
Swedish AI startup Lovable says it has surpassed 100 million in annual recurring revenue, ARR, just 8 months after launch. This makes it the fastest ever software company to reach the milestone, eclipsing the historically rapid growth rates of companies such as Cursor and Wiz. That's bananas.
Yeah.
Eight months. Oh my God.
Yeah, Lovable, I think, is probably my favorite hosted vibe coding platform that's out there. If you're really taking vibe coding seriously, as serious as you want to take that statement, because it's still not coding, you're kind of vibing your way through code, you would be using Cursor, not Lovable, but Lovable it's great. It's great. It's a great place to start, actually.
Yeah. Okay.
The point being is that venture capitalists, what they do at the seed stage and the early stage is it's their job to go out, find entrepreneurs that are building exciting new products, write that first, call it, $1, $2, $3 million check.
Yeah.
Get their ownership.
I don't need to get on bended knee for $240.
Well, exactly. So what's going to happen is you're going to have 10x the amount of ideas hitting the market because anyone can code.
Yep.
And probably even greater than that. We call it 50x. So we're going to try and fail a lot faster, which is great. And then you're going to have, and I've already seen this, startups that are 1 or 2 people, full investment, call it like to their first million users, might be a few $1,000s.
Yeah.
And they're already profitable and on their way to great things. And yes, it's going to be buggy right now because the code is a little bit janky and a little bit half broken, but it won't be in 6 months.
That's going to get fixed real fast.
Exactly.
Yeah.
In a year, it's going to be just, if it's second year CS student right now, in a year, it'll be full on college grad and you're off to the races. And you don't need to raise venture capital. Why would you?
Why would you?
Why?
And also, how would venture capitalists even begin to filter and sort the winners from the losers
There's going to be so many.
with that volume.
Right.
You can't have coffee dates with even 1/100th of those founders, nor would they necessarily take the coffee to begin with.
Exactly.
Maybe if they just want to meet you, sure. And maybe at later stages, if they're going to be really fueling massive growth.